Good morning, everybody. It's Monday. That means it's Market Movers Monday. And boy, what a Sunday night and Monday morning already, especially for Bitcoin. This is, of course, the thing we need to talk about today is this drastic correction we saw there in the early trading hours of Monday morning European session. Is that really just a correction or is a further crash incoming? I'm going to show you here some things on the charts. Lay out my thoughts for you on that, so you can make better decisions, hopefully, for this week of trading, because we have still some stuff coming up in terms of economic indicators this week that we also need to talk about. Really quite important, especially let's be told the inflation data that is coming out tomorrow, which I'm also going to cover live, by the way, tomorrow at 2 p.m. CET. I'm going to be joined by Jonathan Ramdin, aka Lips42 for that again. We're going to do some live trading, see how that is. And then, of course, on Wednesday evening, we have the interest rate decision of the Federal Reserve Bank. It's going to be interesting if they keep the interest rates, hopefully at 5.25%, or maybe we see a raise or maybe even a decline in interest rate. A lot is probably going to depend also on tomorrow how inflation data is coming in. Good, guys, before we start, you know what's coming now. First, please leave me a like and subscribe to the channel. I'm doing this every Monday here. I'm doing new videos on markets, on trading, sharing my trading strategies of 25 years that I've been doing this already as a trader investor here for free for you. No affiliate links, no spamming, no BS. Everything I do here, I do because I like to talk about it. Good, let's jump right into the action here. First of all, let's have a quick look at what actually happened here for Bitcoin. And excuse me, please, if I sound a little bit and look especially a little bit roughed out today. I'm still suffering from the flu. But you know, the markets do not care about, of course, if I suffer from the flu or not. They keep on trading, and boy, do they keep on trading at the moment. So what we saw here happening last night or in the early hours was really, I wouldn't say quite extraordinary, because this is usually what we see quite a lot in Bitcoin. We saw a slump all the way down here from over 44,000 US dollars down to almost 40,000 US dollars, so 10%. We saw a lot of liquidations again in the past 24 hours in Bitcoin. Liquidations means people that were especially long in Bitcoin, that had bought Bitcoin with leverage and then were forced out of the position because markets kept going down. Eventually, you know that, you guys know that probably, when you trade with leverage, you're going to be forced out because you don't have any margin left anymore. And in the past 24 hours, we saw 353 million US dollars being liquidated on exchange. Biggest exchange, of course, Binance here with liquidations. Biggest single largest liquidation was 8 million US dollars. Ooh, somebody really got wrecked there. Almost 180 excuse me, and a half thousand traders were liquidated. That's quite a large number, not the largest we've ever seen, but that should bring the market back a little bit to, to reality, because we've seen, of course, quite a significant move that started here mid of October, that first led us over this barrier that for a long time defined our sideways trading range at 28,500 US dollars. And then basically, with some exceptions, it was really non-stop up until about 44,500 US dollars. So this correction was really overdue, in my opinion. And ironically enough, last Saturday on the 9th, I just wrote about this. I really say ironically enough, because I said here that I noticed that the transaction fees for Bitcoin have quite reached a high. So we were really over 7 million US dollars in transaction fees that were paid to miners to just transact and process Bitcoin payments, where normally the healthy thing is somewhere slightly below 2 million, better even 1.5 million US dollars. And I noticed whenever that happens, when we see really these spikes over $7 million US dollars paid to miners in transaction fees. Sooner or later, we're going to have a correction. That is as true in the last bull market as it was also what we saw here in late April, beginning of May, where that spiked up to 60 million. We saw a slump down again. We are probably going to see this again too. I didn't expect that it would happen so soon, but it is, of course, healthy. Now, one thing that surprises me a little bit is that the fear and greed index, so measuring whether the market is expecting higher prices or lower prices, hasn't changed much. Last time this one came out, okay, we were still at almost 44,000 there. So probably the next reading is going to be a little bit lower. I was already a bit amazed that it's still at 74. Let's see, maybe have they updated that one now already? They haven't, so expect this to maybe go a little bit more into the neutral territory again, which would just be nice for us. Now, two important things that are happening right now. The first important thing is, and this is especially for you swing traders out there, in my opinion, important, is that for now, at least, we were rejected at the 20 days moving average, which is around 40,000 US dollars, 40,170 US dollars. So the average price of the last 20 days. This is good because this is like a moving average. A lot of swing traders are looking at. A lot of swing traders like to place their stop there or like to take this as proactive entries into the market. And so this is a good thing. It remains to be seen, of course, if really, this is going to stay stable, and we can see prices are correcting upwards. At the moment, we're over 42,000 again. So it's going to be quite interesting if we can hold onto this line today. And I think a lot is going to depend, first of all, on the S&P 500. We saw a close on Friday over 4,600, which is good. I said that on the live stream with Lips last week, that in order to open up more to the upside in the S&P 500, we need to close above 4,600, better even above 4,620. Now, on a normal Monday morning, this probably would lead then eventually to some buying in the markets, because that resistance has really played heavy on us for quite a while, not just recently, but especially also back in July already, when we were rejected here in the S&P 500 there for the first time and went down all the way to 4,100 again. But probably we are not going to see so much to the upside. I would be surprised to see much to the upside today, because tomorrow afternoon we have US inflation data coming out at 2:30 p.m. CET. So that's, I think, 1:30 p.m. UTC. As I said, we're going to have a live stream on that. We're going to try some live trading there as well. Inflation is expected here with 3.1%, so slightly lower as the last reading of 3.2%. Core inflation expected at 4%. And this, of course, is very, very important for what is going to happen on Wednesday evening, when the Federal Reserve Bank is going to talk about or announce its interest rate decision. Are they going to keep the interest rate stable at 5.5%, or are they going to change something on that? By the looks of it, at the moment, it seems like interest rates are going to be stable, which is also something that I've been saying really since September, since we reached this plateau, more that tomorrow or though. So this should be a good thing for the market. Of course, if the reading comes in better than expected tomorrow there, so let's say we see 3% or 2.9% or even 2.8%, we are going to have this scenario where we're going to have a massive breakout of the S&P 500 over 4,600. And for sure, we would see Bitcoin then also pulling back to 44,000, maybe even higher. But of course, we also need to be prepared for the opposite. So if the reading comes in worse, and we had already last week, Friday, when the non-farm payrolls, the job market data of the USA came in, the scenario that it was better than expected, which is something the Fed doesn't like to see at the moment, that market were caught a bit off guard. So if really tomorrow the reading is worse than expected, then the fear of further interest rate hikes is going to be in the market again, and for sure we're going to see falling markets. If it's better than expected, we're probably going to see massive rise in the markets. Win zu mein Voids, how are you doing? I'm going to get back to you later. Thanks for the question. All right, where were I just now? Again, so another funny thing that I saw. So markets are going to be in the grass. I don't think there's going to happen dramatically much to the upside tomorrow. Contrary, maybe we're seeing a little bit further selling again, because the market participants are going to be afraid to go with a lot of positioning into the inflation data reading tomorrow, and of course also into the interest rate decision on Wednesday. So be a little bit patient. If you're day trading, careful today and tomorrow around those really important news events. We sometimes see very erratic movement. So your indicators, no matter what you use, moving averages, RSI, and so on and so forth, tend to be not of much help there, like in a normal market. So be a little bit careful there. Nothing wrong with standing at the sidelines for things like this. Yeah, then again, something funny. We had Peter Schiff, of course, this morning already as one of the first one, the gold bug Peter Schiff tweeting again, what's going on with Bitcoin tonight? It's getting a bigger beatdown than the Eagles. And this is something he likes to do. No? He always, when Bitcoin goes down, likes to rub it into face of us, Bitcoin into the S. And I think the reply here of a user called SunnyPo was quite funny, because Peter Schiff in 2018 wrote, don't make the mistake thinking that buying Bitcoin below 3,800 is a bargain just because the current price is better than 80% below its record high. Bitcoin's price could easily drop another 80% from here. And at 750 US dollars, it would still be expensive. Not to mention, dear Peter, if you would have bought here 3,800 and held on, you would have made more than 1,000% in profit. But by this, I mean, he's really into gold. If we can have a look at gold here later too. And it's always the same. I think he's doing this kind of also to get the attention on social media by now. But talking about social media, I mean, this is something we've seen quite a bit already in the last weeks, really, that people are getting a little bit euphoric. Influencers are getting euphoric again on social media. I mean, I saw that. I'm still seeing people writing like, we are going to see $1 million US in Bitcoin in 2024, and so on and so forth. And whenever you see that the sentiment like shifts very, very much into one direction, we are usually very close to the top. Doesn't mean it has to be immediately the top, but usually we are close. And this seems to be happening again this time. Now, long term, it doesn't really matter. As I said many, many times over again, long term probably is not going to matter. If you bought at 44,000, if you use the prices now, if you maybe had your orders there at around 40,000 and bought into the markets today, if you are long term in your DCA into the market, you maybe buy a little bit every week or every month of money that you hopefully have left over from your job. It doesn't really matter. So don't be thrown out of a curve just by these fluctuations in the price we are seeing there. It's completely normal, and it's also very hard to interpret where is the price going short term, where is the correction going to end, and so on and so forth. One thing, that's about the only thing I see like that could lead me to the opinion that maybe short term there could be a little bit more downward potential, is that we are very far away here from the blue line, which is the 50 days moving average, the yellow moving average, 100 days, and of course also the very important 200 days moving average, which currently is at 30,000, around 30,500 points. But it doesn't mean that we need to go all the way down and just to correct this. It very well could also mean that we see maybe something like a prolonged sideways move for the rest of the year in order for the moving averages to catch up a little bit again. Because it's quite extraordinary what we've seen in terms of development the last month, let's be honest. Here, normally this type of really parabolic move would have been something that I expected closer to the halving. But, you know, we don't want to complain. If you've been watching me for some time, not on this channel, on the former channel that I did for a broker, you know that I started buying Bitcoin and stocks again last year in September and October. And this is, of course, paying off very nice. Yeah, let's have a look at the liquidation heat map. We can really see here, we had those massive orders here around 43,000 US dollars, 43,500 US dollars. Once we broke through this, maybe make this a little bit bigger, better to see. Here we go. Really, we had this again. This everybody was stopped out, needed to get out of the market, like all cars at the same time wanting to go out of a parking lot. So price only knows one direction until it stabilizes again. Now there's still around 44 to 44,500 US dollars. Quite a lot of people having ask prices in the market, so asking to sell those prices. That's why I say I don't expect, even if we correct all the way back to 44,000 US dollars today, I would be surprised to see higher prices than that today. That can, of course, change with the impact of the inflation data, especially tomorrow with the impact of the interest rate decision on Wednesday also. So that's about it for the moment for Bitcoin. Interestingly enough, the harder beating again got Ethereum, of course, here. Was also rejected here on the 20 days moving average, of course. There's been quite some talking about Sol lately as well that I saw. I don't know if it's like people trying to talk down Sol. I haven't much looked into this still. Bitcoin dominance still on the rise again, because we can also see Bitcoin versus Ethereum is further going down, meaning Bitcoin in comparison to Ethereum is worth more. You need less Bitcoin to buy one Ethereum, 0.053. I said it before also. For me, probably this is not going to change until we are around 0.5, in my opinion. S&P 500 we talked about. I said earlier, let's have a quick look at gold also. Quite interesting. Has been, after this massive spike up here to 1,000, 2,000, of course, to 120, where all the gold bugs started cheering, finally saying, yeah, we have a new all-time high in gold. Has been slumped down again hard. I kept on saying gold for me over 2,000 US dollars is a sell. I thought already, okay, this time I'm wrong when we spiked up there, but prices came pretty fast down again. So they're also underneath the 20 days moving average. Wouldn't be surprised to see prices down here until 1,960 for the moment. But again, also here, of course, is highly going to depend on what is the US dollar doing and how is the inflation data going to be tomorrow. But quite interesting development here, of course. And I mean, if we zoom out here all the way and let's go back here maybe with a weekly chart, we can see that better. 1 week, here we go. I mean, we are now trading roughly a little bit higher than prices that we saw in 2011 again. And that's the one thing I always dislike very much when I hear all those gold bugs talking about, oh, we have a new all-time high in gold, take this Bitcoin, take this stocks. And then I say, yeah, but you kind of missed out. You have like a lost decade, really. All those people, and I know a lot of people who bought back then at almost 2,000 US dollars in gold and held onto their positions. They had to wait 10 years and more until finally their gold position was in profit. And that in an environment where we had, at least in the last 3 years, quite a bit of inflation also. It's really a lost decade. Even if you manage to sell for the same price that you bought in 2011 or 2012, you've probably lost like 30 or 35% of your money because the buying power of your US dollars just that much lower than it was in 2011 and 2012. So take it really with a grain of salt when you hear people like praising gold so much. I'm not saying it cannot go higher, especially should we see a further decline of the US dollar as being important as a global reserve currency. But my bet is really here more on Bitcoin than it would be on gold. I don't like gold as an investment very much. That's why I say over 2000 for me. Sorry, gold is a clear, not maybe necessarily a short position, but a position you should sell. Yeah, oil prices coming also from the highs down a little bit again, so that's quite nice. The Nasdaq, last but not least, when we have it here, also same picture like with the SP 500, currently trading over its high, trying to get over this December 2021 high. Still, tech still a bit under pressure, especially job market wise. But all of this, and I'm repeating myself here, could change tomorrow with the release of the US inflation data, with the interest rate decision. I'm very, very sure this is going to define how the rest of December, those last remaining 20 days of trading, not even if you deduct Christmas days from it, are going to be, because probably around Christmas and New Year's Eve, it's not going to be a lot of action anymore in the market. Good. All right. I think that's pretty much it for today. Yeah, as I said, guys, leave me a like, subscribe to the channel. I publish new videos every week. Did one actually on a trading strategy also last week, which seems like you guys really liked. Over 6,000 views already on that. So thank you for that. We are going to see each other again tomorrow for our live stream of the inflation data. So have a look here. I'm going to put that online later. 2 p.m. CT, we're going live. Until we see each other again, take care. Have a good one. Remember to always use the stop loss and